time is money. If you're not turning units, you're not making money. And that totally slowed down the process as well. So it was a series of multiple things that took place when we bought our first deal.
Welcome to the Multifamily Wealth Podcast. I'm your host, Axel Ragnarsson, and on this show, I dissect how seasoned multifamily investors started, built, and scaled their businesses. What's going on, everybody? Welcome back to another episode here on the Multifamily Wealth Podcast. In this episode, I'm chatting with an incredibly experienced multifamily investor. I'm speaking with Iven Vian of Anthem Capital Partners. And Anthem Capital is a real estate private equity firm based in Oklahoma City, and they do deals throughout Oklahoma City, multiple markets in Texas, and they do some deals in some other markets as well. And in this episode, we talk about Iven's story and how he actually got into real estate. It's a very interesting story where he faced a pretty major setback early on. And we talk about his journey after that and really into starting Anthem Capital and getting into multifamily with his co-founder. And since then, since inception, in the last 7 or 8 years, Anthem has bought over 3,000 units of multifamily real estate. They've raised over $90 million in equity. And they've just, they've done a lot, right? Obviously, they've grown an incredible business. And Iven's focus in the business is really on operations and asset management and spearheading that side of the operation. So in this episode, we dive into operations, we dive into asset management, we dive into construction management. We talk about, some of the key decisions Iven's made throughout the course of the growth of their business as it relates to bringing construction in-house, which they did in a very unique way that you want to stick around and hear. Talk about how he approaches asset management, some of the really critical things to focus on if you're asset managing real estate. And we talk about how they've actually grown the team at the Anthem Capital level as well to support all of this growth, which, I selfishly found interesting because, we're not even close to hitting the level they are, but we're growing our team and it's just really helpful information. And I think it's really great information as well for all of the listeners, whether you're looking to hire or not, because it helps you to conceptualize what you should be thinking about getting off your plate, whether it's making a hire, bringing in a partner, hiring a VA, trying to do it at a very small level. So just a ton of great information in this episode. And if you learned something in this episode, please consider leaving the podcast a rating and a review, as it helps the show get noticed by more folks. And as always, thank you for listening. Thank you for supporting the show. It means a lot that our download numbers continue to grow. And again, if you think that somebody in your world would enjoy this episode or would enjoy listening to the podcast, whether that's a family member, a friend, a colleague, a coworker, a partner, an investor, whoever, please consider sending this to them and getting them, hooked into our world as well on the Multifamily Wealth Podcast feed. So thanks again for listening. And let's get to this episode with Iven Vian. Welcome back to another great episode here on the Multifamily Wealth Podcast. Joining me this week is an extraordinarily accomplished investor. He's based in Oklahoma City, somebody who has been involved in numerous large multifamily transactions, a lot of experience, and really excited to chat with him today. But joining me is Iven Vian. How are we doing, Iven?
Hey, how's it going, Axel? I'm doing outstanding. Thank you for having me, and look forward to today's show.
Absolutely. No, I appreciate you carving out the time. Why don't we start with your story? Maybe share, what you're doing pre-real estate, how you got into the business, and what you're up to now.
Yeah, absolutely. Yeah, I got into real estate because I first lost $21,000 in the stock market. I was a young lieutenant in the Air Force and put all my bets on a fund with a certain mutual fund company and lost it all, man. And that was heartbreaking. I said, there's got to be a better way to put your hard-earned money to work for you versus you work for it. And that's how I started searching, reading books back in the day before podcasts and YouTube about real estate. And I was moving down to Newtown and get relocated. And my mother-in-law said, hey, there's this lady going through divorce. She really needs to sell her house. And she knew I wanted to jump into real estate. And so I literally just dropped everything I was doing at the moment, ran down to the house and asked if I could buy her house. She sold it to me that day for $33,000. And rest is history, man. Got the real estate bug and kept on going from there. That was back in 2008.
Love it. No, that's great. So obviously, I'm sure a ton has happened between 2008 and 15 years later, today. But let's talk about maybe some of the early days. So, 2008, buy the house, is it, do you jump right into real estate right away? Is there kind of a test the waters, kind of build a portfolio on the side? Maybe take us to when you start getting a little bit more serious, obviously 15 years later, thousands of units under your belt, et cetera, et cetera. But what did it look like back then in terms of that journey?
Yeah, didn't have a lot of money and looked like me trying to sell things on Craigslist to find extra capital to put in real estate. I
That's
mean,
exactly what I did. That's funny.
yeah, it's funny, right? So, but man, I got the real estate bug, but I got lucky in my first deal. I didn't have a mentor. I didn't know what I was doing. I got lucky. Honestly, I did. The second deal I didn't get lucky. Tanked myself financially, overpaid, over rehabbed. I was underwater about $80,000. About 70,000 of that, I think, was on a credit card. And I had to spend the next 4 years digging myself out of this freaking hole I put myself into. I learned a lot, but that was my time to go to college and really get smart about real estate. And I wanted to reverse engineer and figure out why I made all these mistakes. So I got a mentor. And once I got the mentor, it was like clarity in its finest. I knew exactly where I made mistakes, what I needed to do after that. And I was able to scrounge up some extra capital. I ended up getting about 4 rental properties, but I was out of money at that point in time. Had to put things on hold and save up. I got an opportunity to move to Oklahoma City in 2013, about 5 years after I bought my first rental. I had about 4 rentals out of my pocket, and I was ready to go. I was trained up, I was learned up, and I hit the ground running. Went in and started buying a bunch of rental properties. Ran out of capital again, which is a common theme for real estate investors, I guess. And my broker said, "Hey, get your real estate license. You can sell properties on the side for me." And so I did. And on my lunch breaks and after work, I would sell these little rental properties in surrounding areas of Oklahoma City. And it was an amazing opportunity. The market was hot. I sold about 99 houses in 2 years, earned all this additional capital, put it all back in real estate, built up a portfolio of about 30 houses. And, I was cooking along, and I had this whole dream and goal that when I retired from the Air Force, I would not have to work ever again. And, but things just weren't moving as fast. And I was starting to crunch the numbers and looking at the time and effort and allocation of all my energy. I said, there's got to be a better way. And that mentorship program I joined prior to me, or just after me taking a nosedive, talked about multifamily. And I said, oh my gosh, that's what I really want to do when I retire. And I just didn't know how I was going to get there, but I just kept working and things started kind of happening for me. I got a business partner who was my first client in the single family days. And he and I partnered together and jumped into multifamily about 7 years ago through another mentorship program, and never looked back. Same attitude, same level of effort. And today we've done about 3,000 doors. We bought 19 deals, sold 14. Been fortunate enough to raise $90 million in equity with all our investors, and it's great. It's been a life-changing experience. It's totally changed my life, my family's life. It's given me opportunities to do things that I've never thought I had an opportunity to do while in the Air Force, while working a 9-to-5 job. Certainly has being an entrepreneur certainly has its highs and lows, but if you learn to kind of stay level-headed in the midst of all of that, there's so much opportunity out there in this space that we live in today.
Yeah, I mean, absolutely. 3,000 units, $90 million is an incredibly significant amount of deals, capital, et cetera. And I'm sure we're going to get into the complications as it relates to growing a business of that size, both on the business side and then also just operating all of the properties, right? There's almost 2 layers of operations, I'm sure, that you've had to, spend some time developing. But I just want to clarify something because I think it's so interesting. Did you sell 99 homes over a couple of years while you were still in the Air Force? Was that like on top of being in the Air Force?
Yeah, it was crazy.
Oh my gosh.
My broker decided to handle all the transaction side for me. So I had a pretty good gig where I would just tie it up and send off the contract with the broker to close. I didn't get 100% commission, but I got enough to buy me a lot of houses. So it was turn and burn, man. It was crazy. Yeah. I mean, there were weeks where I have like 7 houses under contract,
That's a lot of that's just a lot of addresses to keep track of. A lot of transactions, a lot of deals, a lot of individuals. But no, that's incredible.
Yeah.
So you decide to get into multifamily, right? You have the 30 houses, you want to get into multifamily. What does that first deal look like? Did you jump straight into like large, 100+ unit multifamily, or was there, kind of a scaling period? What did that look like?
Oh, we went all in, man.
Yep.
We were crazy, I guess you can say. I don't know. Maybe I am, maybe I'm not. But our first deal was a 3-property portfolio 50 units, 65 and 99 all at the same time. I bought 3 apartments all at the same time, 3 loans, 3 LLCs, 6 LLCs, I think 7 if you tie in the one at the top. It's like, oh my God, this is my first deal. It was a whirlwind. And I was still doing the realtor thing, construction management, all kinds of other things. I didn't sleep, and had to ask for forgiveness from my wife for not spending time with her. But it was well worth it, man. You know, you got to do that first one, right? The first one is the most difficult one. Don't recommend buying 3 at the same time. You know, get yourself, depending on how big your sponsorship team is, if you got partners or not, get a nice little 50, 75, maybe 100 unit max, and learn,
Mm-hmm.
you know. Man, that first deal did not go that well. Learned a lot again. Thankful enough, my investors decided to stay with me. We handled it fine to continue to invest with our investors, but we did not have the right absorption in the market. There was too much Class A supply, and it watered down the fact, and it limited my rent growth ability in the Class C. Hired the wrong property management company. Had multiple turnover, a lot of turnover in the manager seat level. Had poor construction management processes in place, all kinds of things. And I was my other experience of going to college. We still sold it for a profit, didn't lose any money, but it's certainly a challenging experience nonetheless. But honestly, I'm grateful for those challenging moments. They define who you are, and they make who you are today as a better, sharper, keener operator. And a lot of the things I learned then 7 years ago is a lot of things I do today is a direct result of my mistakes and my challenges I went through 7 years ago, of all the processes and procedures I use today to make sure we can effectively execute in the operational side of the departments.
Absolutely. And I know we're going to dive into that quite significantly today. But I want to pull the thread a little bit more on one piece of some of the lessons you learned on that first deal. You mentioned you hired the wrong property manager, right? I've done the same on smaller scale deals. My journey into it was a little bit more slow in terms of, buy the 4, buy the 8, buy the 20, start syndicating the 50s, and then try, now we're doing some slightly larger stuff. But I hired a lot of bad property managers when it was just my property, my money, and I was kind of like learning that process then. And I have all kinds of lessons that I share on this show. But is there something specific about maybe that first PM, second PM? You mentioned you had some, multiple turnover in that seat there that sticks out as like a real learning lesson that you took into future deals?
Yeah, for sure. I have a 22 due diligence checklist that I can share if anyone.
I mean, let's do it, man. However many you want to share. I mean, I'd love to get into it, but
and growing. But all right, here's the thing. So we hired a company out of Dallas to come into Oklahoma City market. That was mistake 1. Hire a company, in my opinion, that is established in the market you want to be buying in, especially your first deal, unless they have a very, very strong track record of being able to break into a new market. But it takes supporting cast members, not just the company itself, but supporting cast members to operate an apartment. What does that mean? Third-party vendors like contractors, plumbers, electricians. Yep. It takes a whole local staff. Maybe the company's based out of Dallas, but you still got to find people to work on these properties as managers and maintainers. 2 weeks before closing, we didn't have a staff. No freaking staff, dude. 2 weeks before closing. In my mind, 3 months, 1 month, 2 months before closing, they've been through your training program. They've already practiced on another property. They show up ready to go at your property. Did not happen like that. Additionally, like, you got to understand, make sure that they have a keen handle on the payable process. We were, of all the properties, maybe we had a $2 million rehab budget, let's say. And the invoices were getting paid late. We were losing track of the invoices. There were times we had at one point in time after the property management switchover, because he finally fired that first company, we found $100,000 in invoices total sitting on a desk that weren't not entered into the system that we had no visibility on, while we already committed our rehab budget towards other projects and that work was in progress. So how in the heck were we going to pay for this $100,000 we didn't know that we had to pay for?
Yeah, it's like a kick in the gut. Yeah,
you gotta have an awareness of this, of what goes on behind the scenes, as far as from a basic level book general entry procedures, accounting processes, on the back end to make sure you have complete visibility of where your property stands from a global cash standpoint, global payable standpoint. Anything going in and going out, you got to have complete visibility. And that is something that I definitely research and make sure that I have a comfort level before I bring on a new property management company to manage my property. So that's, one is locality, two is payable process. The third one would be this value add business we're in, and especially in the Class C space, you're adding value. You got to have integration somehow. Either you have a construction background, integration of construction management. You either have a construction management background, you have your own construction team ready to go, or the property management company has to have that. And again, if they're a new company, a new market, it may not have that, or they're trying to bring guys out of Dallas, which that's like creates operational drag. Literally dragging people out of Dallas to work in Oklahoma City slows you down, And it's like it slowed down our rehab process. It took forever to find guys, cost-effective guys, and you got to turn units. Time is money. If you're not turning units, you're not making money, and that totally slowed down the process as well. So it was a series of multiple things that took place when we bought our first deal.
Yeah, no, I mean, I'm glad you brought up the construction piece, because if you hadn't brought it up, I was going to ask you, was your PM involved with it, Jason, in terms of they assisted, or did they, did they run the construction management process? But I mean, you kind of just answered that, and it is, I think that is oftentimes where on a value add deal, especially Class C, right, because we do the same thing, things can start to get out of control pretty quickly if your PM is also acting as the construction management company as well. And they're the ones that are sourcing either the GCs or running their own crews. And it's, and you don't necessarily have the level of touch on that part of the process as maybe you need to ensure that, a 30-day turn isn't taking 45 days, or a renovation or what have you. And, or you're just running over budget, or there's just the wrong types of individuals, they're mismatching the GCs with the work. They have a GC that's too high end for a Class C property, or inverse if you're buying nicer properties. Because that's where, in terms of where we've gone wrong on deals, that's really where it's been, is the construction management component of it. And it's really the hardest thing to get right, I think, because that's where the stakes are really high in that first 12, 24 months of a deal. Like, if you blow out your budget, it's going to take a while to recover from that. And that's typically, and where I've seen a lot of operators get in trouble, is they just blow through their budget and they didn't necessarily plan for that. And that's when you start dipping into reserve capital, and that's when issues can compound. So do you now have a construction arm to Anthem, or to the business, or how did you mitigate that risk over time?
Yeah, like I said, challenges turn into opportunities. Now I'm grateful for those challenges, because it forced me to create my own in-house construction management process team.
Yeah.
And I have rock stars, and I have unlimited number of workers that can work in any market. So much so that I'm doing third-party construction work for other operators out there, by the way. It's a unique situation. I have a friend who's Ukrainian, and he's tied to a lot of Ukrainian refugees and workers. And to help out, for them to help out us, they can fast track into the US with construction backgrounds and work on our properties. And why it works, the reason it works, one, they're hungry. They're the best. They're just hungry, man. They're ready to go, and they want to make a name for themselves, and they're proud of their work, and rightfully so. And they live on site. It's key. They live on site, and 95% of the time we can get them on site. We get them on site. They're not distracted by any other job. They're only married to your job. They're there from Monday through Saturday, 7 to 7, 12 hours. So execution, deliverability is there. It's like speed and accuracy all at the same time. So we can bust out easily 15 full renovations in 1 month. We're talking like three and a half or so more per week, full renovations, and we can manage the whole thing in-house. You have sometimes these interior units, you have maybe a granite guy come in, or a flooring guy come in, or you outsource the painter. We can do it all. Mm-hmm. Streamline the process where you have, you're stair-stepping the whole thing, where you're doing flooring, knocking out flooring, you're knocking out granite countertops and coming back in and finishing up with the odds and ends kind of thing. And so you create this maximum efficiency, right? And saving 10 to 15% of market pricing. So that's huge.
That's incredible. Yeah.
Huge, right? And that came through pain. That came through my own blood, sweat, and tears. Like, I see the bottleneck issue here. I need to fix this. How am I going to fix this? And it was a godsend. My friend's Ukrainian and said, dude, I can help you. And then we formed our own construction team. Now the word's out and people are using our construction team for their own projects because how amazing they are.
Mm-hmm. No, that's a killer solution. And you've turned what is, in my opinion, the hardest part of the business into like a core strength of your business. Like, for the folks that don't have that, managing the construction on a value add deal, in my opinion, I think is the most challenging, because if you have a great PM and they're dialed in on the leasing side, on the maintenance side, on the tenant retention side, and you have a quality PM, great. You've got that piece figured out. And I think it's also a lot easier to bring that in-house if you're an operator than bringing construction in-house, because they're two very different skill sets. And they require, I think a lot of multifamily operators, they kind of understand the property management side because they're a little bit more aligned with that than construction management. I think that's just it requires a different knowledge of the business. And to have that be a pro is such an advantage. Now, you obviously invest in multiple different cities. You're not just in Oklahoma City. I know you've done deals in Texas and other markets. So when you say that this platform, you have folks anywhere that can assist anywhere from a construction standpoint. Now, do you have, folks from Ukraine in all of these different markets? Do you have different crews in these different markets that are on payroll, or do you just have great subs and you kind of act at the GC level, or what does that specifically look like?
Yeah, no, we have crews, our own in-house crews.
Yep.
We have mobile teams that will relocate to a job site,
Gotcha.
kind of thing, or we pull out of market and onto a project, and then we'll focus on Dallas. Now we have our own operations side of Dallas, and we continue to we have properties in house. So but we can do it all. We can do it all, exterior, interior, etc. So that's how we do that.
Got it. No, that's great. Now, from an asset management standpoint, now we'll probably talk a little bit more about construction too, just as a result of this, but also just on the management side. You guys close, you buy a value add deal. I'm assuming, we're going to do some exterior renos. We want to get in the units. We're probably going to try and push rents, etc. What is the system look like at the asset management level to oversee everything, right? In terms of weekly calls or tools or, software you use or KPIs you track? Like, is there, do you have a kind of a few core systems, processes, data points, et cetera, that you really lean on to successfully asset manage the implementation of a business plan?
Yeah, absolutely.
Probably a broad question for you, but
yeah, I have a framework, PTTR framework: people, tools, tactics, and roadmap. Let's focus on tactics and tools. So
okay,
I have a weekly KPI call meeting, for example, right? I have my own KPI sheet that has 50 plus markers on there. The whole thing as an asset manager is you gotta be able to be myopic and micro at the same time. Let's say you got to be able to have people and processes doing things at the very micro level. You're inside a unit, you're turning a unit, make sure the scope is correct, make sure payables are being done, make sure that the punch, like these very micro things. Same time, you have to be able to step out of the ditch, look around, and make sure there's not an interest rate hike coming that can sink you.
Yeah.
Or COVID that can come and take you out, or some, local demographic shift going on in your market. You got to be aware. So it's a very unique role that we play in. And so I have a KPI system to do that, where I'm managing trends, looking at trends, physical economic occupancy. I'm looking at my income rates compared to projected and actuals. But there's even deeper understanding of this. Again, you have to be able to understand, you have to have foresight. I looked at in terms of exposure. And exposure comes in many different ways. Exposure comes in through, you have a delinquency that may be building and you have to nip it in the bud. And the way to do that is be strict on delinquency and push evictions. And all of a sudden you have all these evictions coming. And that's exposure. Now you could have potential bottleneck of not being able to turn enough units By the way, if you have a lot of work orders, your in-house maintenance guys can't turn those units. And if you don't have a system in place to turn units, now you have no units being turned, and you're going to have vacancy loss because they're sitting there not rent ready. You have to be able to understand that and see this future exposure coming your way and nip that in the bud and put in solutions now to prevent a problem from happening down the road. Another example of exposure is not getting renewals. Again, that's going to open you up of, well, I have to now lease the property back up, right? And another one is payable exposure. Like, you have all this work in progress going on, but you have to track that work in progress. That work hasn't hit the books yet, but they eventually will. And if you don't know what your book balance is and what your running balance is, going out there committing funds and other projects and making other decisions. And like I said earlier in this meeting, like the other example, well, we didn't know about those payables, but this time we do. Mm-hmm. But if you don't have a plan to make sure you cover those payables, you're screwed, right? And you may probably come out of your reserves or your own GP reserves to pay those payables. So you have to, that's exposure as well. Another one is insurance, man. Like, one of the most boring topics out there, one of those important things to understand is insurance. Maximize coverage at the minimum cost. And how do you do that? There's a fine line. You don't want to have a deductible so high to lower your premium that you may not be able to get say a total loss on a roof to be able to cover it. So there's a fine line though of how much deductible I'm willing to pay to keep my premium low, or vice versa, right? It's an inverse effect there, where the higher the premium, the lower the deductible, the higher the premium, yeah. Deductible, right? And so, but then you have to look at your coverages and really break it down to see if you're going to cover your losses, not only from a physical standpoint, the operational rent losses, and the liability exposure involved. Make sure all your liability exposures are covered and accounted for. If you have a good insurance broker to walk you through that process, that's key. And that's where my framework of people comes in. You got to have the right people on your team to make sure you stay out of trouble. So you as an asset manager you're affecting the operation, you're asking the right questions. You're really not a manager, you're a leader. You're getting people to work together to operate this business. But you got to do that, but you got to be able to understand exposure and have foresight. And to me, that's like one of the most critical skills. And when you're new at this, like you're trying to hold on, man. This thing's pulling these mud, and you're like, oh my God, I don't know what I'm doing. You feel so lost, right? And so that's why you got to have people on your team to really walk you through that process and understanding of what is going on. But I just break it down. It's very simple. You got a business, you got input, you got output. You got to maximize the input, minimize the output. The better the input, the less the output, right? Of tenants, ultimately, in dollars, right? And so really on the front end is, do we have the best marketing in place? Do we have the best ways to attract the best tenants, assuming we have the best product right here? We better be bringing the best tenants, because if we don't, it's going to result in delinquency, economic loss, and more output. So focus on the front end and have the best marketing, have the best lead conversion system in place, and track all of that in the interim, right? Now you have the best tenants in, and now you can mass produce that and keep them there and keep them happy and keep the property whole.
No, that's great. A lot of great tips in there for sure. A lot of different things that need to be focused on, as you mentioned, right? It's a delicate balancing act of all of these different components and understanding how they play together. If there was one or two, maybe it depends if you have multiple, right? Maybe it's one, maybe it's a couple, maybe it's more than that. Common mistakes that you see other multifamily operators making when they're asset managing their portfolio. Is there anything that sticks out to you in terms of, like, I constantly see that we're really careful in our business to not make that mistake. And it's just, it's an easy fix for folks to make.
I think you said it already. One is misappropriating capital funds in terms of rehab.
Yeah.
Screwing up the rehab, overcommitting dollars, and where you expect, let's say you expect to rehab 100 units. One, you didn't underwrite correctly because you thought it would cost $10K, and now it ends up costing $20K per unit. And that's kind of like the market. And some of these rehab we're doing is really 15 to 20. Let's say get it less because I have in-house construction management. But I already talked about that, but messing that up, that's huge, because if you do not have the dollars to invest in these interior rehabs to affect your rent growth, burn off your loss to lease, you can't drive that top line, you can't improve the NOI, and you can't make up for it by minimizing your expenses, and you're not going to hit it, or you're not going to have cash flow, and you're hoping, praying that the cap rate's going to compress by the time you have to exit. In the market right now, it's not looking like it's going to do that for a while, right? So you got to be very thorough in the very beginning of your due diligence process and truly understand what it takes to execute a business plan, and look at things from an operational perspective, not a financial perspective. And that's the thing. A lot of guys, no offense to you financial wizards out there, but a lot of guys don't understand what it takes to effectively execute a business plan. They can underwrite it from a financial standpoint, look at historical data, look at projected data, come up with some type of assumption, put some numbers on a sheet, and yeah, we can do this. We can raise total income 10% in year one. But then they don't understand that the operational drag you're going to have, because you have a lot of delinquency, right? Or you have a lot of units to turn, or you have bottlenecking in the supply houses out there because you can't get canvas on site quick enough, and you didn't build in all these paths into your operational plan overall. And guess what? Now you're behind the timeline, and like you said, your year one pro forma, your year one plan is out the window, just like that. It happens so fast, and it's we're not hitting, at that point in time, but we're not hitting pro forma rent. Yeah, because you're at 80% physical occupancy, dude. Burn off your vacancy loss. Let's just get this thing filled up. Then worry about hitting the pro forma rent. Your plan is done, right?
Yeah.
So, got to have people on your team to walk you through that understanding, to truly understand the operational requirements and what it takes from an execution standpoint. That is one of the biggest mistakes, and I continue to harp on that overall. I think, another mistake is just partnering with the wrong people. And really, everyone's so, happy to get in the business. I want to get my first deal, and they sign up and, and partner with whoever, and after knowing for a day or something, it's there's some people I've been talking to for a year now, and finally maybe he's decided. But I've made those mistakes. I'm saying this for my own mistakes, and I wish I've taken longer, vetted them more, walked through some trials of maybe underwriting deals before we truly agree to work together, and see the little things. Do they show up to that meeting on time? Do they respond to those emails in time? Are they, do they do what they say they're going to do? And those partners I've had that looking back, when there are a lot of red flags, I ignored, and I wish I would have paid attention to now, because it's going to make your life a lot easier in this business when you're going through the thick of it, when you're going through the mud. You need those partners that you can freaking lock arms with. You're going to get through this thing together. And there's going to be those moments, man. There's going to be those freaking moments where you're burning the midnight oil, where you're not going to get any sleep, and you don't know how the hell you're going to get to the other side. I've been there, and if you have partners you can count on and trust, dude, it makes it so much better and easier, and you will win as a result. You will win, right?
No, I love that. Yeah. I mean, I think one of the hardest things for folks to do that are newer is temper the enthusiasm to get in the business. As you mentioned, you want to get in it, you want to get that first deal, you want to get rolling, tempering that enthusiasm and trying to just reduce the impatience that you have to get into a deal, right? Because I think it's, you got to get to another first deal, because the first leads to the second, and then you start gaining momentum, and then and it's just you're almost shaking, chomping at the bit to get involved in something. And it's that enthusiasm, that impatience oftentimes leads you to make less than optimal decisions. As you mentioned you were there. I've been there myself. I've partnered with the wrong folks on deals, and it's you don't really know until things start getting a little bit rocky, and then you're surprised at maybe how somebody is thinking about handling it, or you're not pleased with how they're handling it, or their communication becomes less frequent, and it's and then oftentimes that compounds, right? And it's really hard to do, but it's that's probably one of the most important things for if somebody's listening to this and they want to go, scale from doing their small deals into the bigger deals, and they need a co-sponsor and they got to go out there and raise money. And I mean, this is especially true if you're raising money from your network and you're raising money into a deal that you are partnering with another individual on, like then you really need to focus on tempering that, because now you have so much reputational risk on the line, not just your own money, right? And that's a totally different ball game. So I mean, that's a killer tip. And it's funny how hard it is, especially the last few years as the business has become more popular, to temper that. But it's a good thing to focus on. Now, 3,000 units, $90 million, that's a massive business, right? Correct me if I'm wrong. I can't imagine you're asset managing 3,000 doors, right? Or, and maybe there's a system in place or you and your partner share those responsibilities. But what I'm interested in is how the business has grown, right? In terms of what the Anthem capital business actually looks like to manage the portfolio to sustain this level of growth. Is there salaried folks in the business? Do you have a team? Like, what does that team look like at the investment level?
Well, now that you made me seem like a rock star, I'm going to temper it down a little bit. We don't currently own 3,000. I think at the beginning I said we bought 19 and sold 14, so we got about 5 properties now.
But to raise $90 million over the course of time and to source that many deals, et cetera. I mean, it's still a sizable business, right? Even if you have 5 now,
I haven't answered the question now, but I just want to be transparent about that. But
I appreciate it.
Listen, you have to. One of the things I wish I would have done earlier is hire out quicker and hire out earlier. 3 buckets in this business: you acquiring bucket, holding operating bucket, and you have this investor raising equity bucket, operating and looking for a new deal bucket. Okay, and like in the beginning, you're trying to do it all. Like look for a deal, find to get one, operate that. While you're operating that, you're still trying to raise capital. But while you're raising capital, you're not looking for the best. It's like, what if you found? What if you honestly do this all over again? Find a team that like, and trust, you resonate with really well. Sit down and create a long-term strategy. Maybe create some flexibility. If it doesn't work out, you got some outs, ways to get outs. But like 2 to 3 people, you can come together and listen, we're going to go to Dallas. We're going to take over Dallas and draw out what that looks like. And it's going to involve going at a massive volume and scale so you can have the income to hire out. I eventually built my back-end team. I have back-end executive assistants. A lot of my investments on the marketing side and managing all the marketing systems. I have a full-time marketing director or CMO, really is the top level with us as a partner and helps find deals and everything. But I wish I would have managed outsourced marketing earlier. And marketing, in my opinion, I'm very pro like social media marketing, all the marketing things you can be doing. Like you got to do it in a digital world today, and eyeballs are looking at the screen. So you got to market to the screens, man. So build out that and understand that side of the business, how to market well. There's a lot of resources out there to help you do that. Marketing. And then, but for me, I have my own like mastermind, and I groom people, and then has transitioned into like partnering with them so I can scale out in these multiple markets where I don't have boots on the ground access and still operate deals, implementing the systems and process that we built over the years, but now someone else is doing it. It's kind of like a Chick-fil-A model. They have restaurants all over, but they have local operators implementing the corporate structure and systems and processes. And that's kind of how I have been able to grow and do this. Because for me, it's very important to have boots on the ground representation, knowing this value add piece and all the things we talked about on the construction management side. Someone needs to be there cracking the whip every day. And so that's through partnerships that I've been able to grow through our own platform.
No, that's great. Yeah, it's funny. I haven't hired somebody full-time on the marketing side in our business, but that's probably the next person, just because of the sheer volume of work required to market at a high level, whether it's content creation, whether it's email marketing, whether it's, and then you can break down marketing to marketing for investors, marketing for deals, marketing for relationships on the brokerage side, what have you. trying to maintain great relationships with all the people in your network. There's an element of marketing there. I mean, it's just a lot of work. It requires a significant amount of input to produce the desired output. And it's not as scalable or as leveraged as maybe raising capital is, or finding deals are, where you can have a few key relationships that produce and produce and produce. But it's interesting. I mean, I hear you. That's kind of where we're at in our business as well. Now, one last question here before we start wrapping up the show. I want to make sure I get you out of here on time. As you were growing in the early stages, in terms of, you broke it down, and I like how you broke it down. You have the acquisitions bucket, the operations bucket, kind of the equity bucket, right? In terms of the three verticals in the business that you might want to hire in. Do you have a recommendation for somebody out there who's, maybe they got a couple hundred units, they want to scale their business, in terms of they want to bring somebody into their business and actually start to leverage somebody else? Maybe they don't have partners in their business. What do you think is an appropriate first hire, in terms of what do you think should be the first thing that somebody looks for help with?
Asset management, some form of asset management.
Yeah.
Very time intensive. And, there's different levels of asset management. You got the back end piece, but still someone can be offshore, offsite, and still manage a lot on the back end. But even on the front end, someone to do what we just been talking about, but to take that on, it's a full-time gig, and you got to have consistent oversight and watch on these properties. And so while you're out there, if you're the guy that's looking for the next deal, you're going to lose sight on your current deal. I mean, you got money hard on the line. You got to raise $3 million by the end of the month. Where do you think your tension is going to be, dude? Don't close that deal, you're going to lose $400,000 or $500,000. And so your property's going to, be honest, your property's going to suffer. And there's issues going on in your property. And if you don't have someone there taking care of your property, taking care of home base, you're going to fail, dude. You're going to fail. And the biggest way to grow in this business is take care of home. If you take care of what you have in your home base, take care of all your investors, and deliver on what you say you're going to deliver, they're going to market for you. They're going to help. They're going to go find other people to invest with you, because they've had such an incredible experience with you, and you've been able to under promise and over deliver. So asset management is where you make the first hires, on the front end and the back end, the admin side. Someone on the back end does all of my reports, set up all my KPI calls, and it runs down all of the action items that need to get run down on a day out, day in basis of between the lenders, the property management company, and the insurance, all these little things that require your time, effort, energy. Have someone on the back end as well.
Love that. And that's an exact reason why I tell a lot of folks who are looking to invest passively, be careful about investing with the solopreneur, right? The individual. It's just, where they don't even have like a partner in the business, where it's truly just them. If they have a desire to continue growing their business, it's going to be really hard to manage all of the different components of the business, right? And that's like just a simple little piece of due diligence you can do on a potential sponsor when you're investing, is what does the team look like? Whether it's an employee that's spearheading the operations, or whether it's a partner that's doing that, who's working on what. When you guys close this deal and you're going out there to continue growing the business, which we're not going to fault you for doing, who's taking care of home? I love that phrase. I like how you use that, taking care of home. So I think that makes a lot of sense. I mean, that was the first hire in our business, with somebody in operations to help with the asset management, help to, because I was like, I don't feel good going out there looking for the next project while also trying to get on the asset management call each week, but I'm kind of losing track of where I'm at across the whole spectrum, right? It's a dangerous place to be. So makes a ton of sense. Iven, this has been great. I want to make sure we get you out of here. Where can folks learn more about you, learn more about Anthem, connect with you, all that fun stuff?
Yeah, absolutely. Actually, I have a Facebook group that I am building. It's called Apartment Ninja Warriors. Apartment Ninja Warriors really focus on asset management operations. And I'm creating a community of people for all us to come together to really unite and come to the table with our challenges and our solutions, so that we can all grow together, especially in the times that we're facing today. So check me out on Apartment Ninja Warriors on Facebook. Awesome.
Sounds good. I'll throw the website as well in the show notes. I'll link that too. If there's anything else, we'll touch base after. If there's anything else you want me to throw in the show notes too, I'll make sure I get that in there. But Ivan, appreciate the time. This was an incredibly tactical and helpful conversation. And I hope we stay in touch here.
Thank you so much. Pleasure being here.
Thank you for listening to this episode on the Multifamily Wealth Podcast. If you learned something new during the show, please consider sharing this episode with a friend, family member, or business partner, or just leaving a rating and review as it helps the show get noticed by more folks. Catch you next week.